Lithium stocks have been soaring. You might be wondering why some of the companies you've been watching are up 10, 20, 30% just over the past week. There's been a few fundamental reasons which we're going to unpack today, but then we're going to dive into the major announcement that came through in the past couple of days that has transformed not only the electric vehicle sector and many of the lithium names associated with it, but the broader green energy and decarbonisation trend. It's a fascinating time when we're just having a look at the numbers here initially. We can see here LIT ETF. We can use this as a proxy for the broader sector. Of course, if you're familiar with it, it houses many of the larger blue chip names. So it's up by 8% over the past month. But if you're looking below the line, many of these earlier stage companies, perhaps those that are pre-revenue or still in the development and exploration stage, are up by 10, 20, 30% in many cases. So you might be wondering, why is this happening? There's three distinct reasons on the fundamental side that we can distill it down to. First and foremost is positioning. It's not bringing a surprise to anyone that we know that the start to 2022 has seen us experience a bear market. There's been a sharp contraction and we've seen a lot of sectors down. Not many companies and sectors have been immune. The broader lithium trend has of course suffered as a result of that. When we're looking at the chart, we know that 2017-18 was a boom period for the sector. Then 19-20 of course was a down period, really catalysed by the Biden election win. At the back end of 2020, there was exuberant times for the broader sector. But as we know of the past couple of months, valuations had come down. And so a lot of investors were starting to see if there was an opportunity to potentially get in at lower prices in comparison to 6, 12 months ago. And so positioning was one of those initial drivers as the sell-off had brought down valuations. Number two is on the short side. It looks like, particularly on a more individual name basis, there was short covering coming through. Of course, this does not speak to the broader sector or the broader market trend, but interestingly, if we're thinking locally, many of the names, particularly those that are still pre-revenue in the development stage, were elevated onto some of the leading indices. Of course, this opens up many of their shares as well and provides them exposure to a range of different funds. And so we saw some of the short interest in some of these companies creeping up over the past 3, 6, 12 months. As a result of that, we have seen some short covering from a number of different companies, and that momentum has driven perhaps some of the moves off the bottoms and the lows that we've seen. And then on the third side, a real fundamental driver that is not so surprising is that it looks like the trend is here and here to stay. Potentially, we might be heading into a recession. Are we there already? That's a broader macroeconomic discussion that's outside of the scope of this video. But the lithium and EV adoption hasn't entered into a recession. Of course, yes, it potentially could affect buying patterns and trends, particularly as if cost of living continues to rise and we see unemployment tick up and things like that. However, the trend towards decarbonisation, electrification of the fleet, and of course the focus from manufacturers as well as governments moving away from the fossil fuel driven industries is here to stay. And we see a couple of different articles that have come out over this past period. Elon Musk stated Tesla could build 10 or 12 new gigafactories to reach their goal of making 20 million cars a year by 2030. That's under 10 years away. This $500 billion plus figure for global car makers, manufacturers to target this transition towards electrification continues to get pushed out there. But just to give you that context, 20 million cars a year by 2030, just from Tesla. This is not all OEMs out there. This is out from IEA, the International Energy Agency, for 2021's new electric vehicle registrations. We're below 10% penetration, and this is under 10 million new vehicles registered. And we see here that Elon Musk is stating that potentially Tesla wants that 20 million vehicle target by just 2030. So if you think about all these other manufacturers that are looking to come online and come online rapidly to meet their targets, and also the government mandates that are coming through, EV penetration is likely to rise, and consequently demand for the underlying commodities, not just lithium, but potentially nickel, cobalt. Of course, it will depend on the battery chemistries as well. There is a runway ahead of this sector that continues to push moving forward. And now before we talk about this major announcement that came through that really has driven a lot of eyes onto the climate change, green energy transition, let us know your thoughts, drop in a comment. We've also just dropped this second channel for investors. So if you haven't, make sure you've subscribed, turn your bell notifications on. Plenty of videos coming, not just in the lithium and EV space, but across the broader market. So I hope you enjoy them. But a lot of the excitement has really centered around this Inflation Reduction Act. This is a bill that's just passed through the Senate, with the Biden government. There is a significant amount of excitement surrounding it. There's a $300 billion plus that will be spent on the climate change effort, significant spending on healthcare, and as well as corporate tax too. But today we're not going to dive into corporate tax changes. But today we're not going to dive into the nuances across all of the sectors. the focus will be on this climate change sector of it. So really there's two core areas that they're looking to target. They're aiming to reduce greenhouse gas emissions with this Inflation Reduction Act by electrification of fossil fuel use cases, and on the other side, continuing to focus on electricity generation, but using more renewables and clean energy. If you want to get more of an understanding about the bill, you can dive into that later. There's a lot of great articles and videos out there already. But to get that understanding, there's further tax credits for electric vehicles, both used as well as new electric vehicle sales. We know that Europe and China and Asia have really driven the electric vehicle transition, but the US wants to catch up and become a leader in this space. And so they're looking to help look towards this for the EV side. Obviously as well for the electricity generation side, heat pumps, rooftop solar panels. There's a lot of funds going towards that area. And there's also a big aim too, when we're looking not just at electricity generation, but alternative technologies and solutions and how they can feed into that broader energy mix. It's going to be interesting to see, obviously, how we've been doing things in the past. It needs to change, and we're starting to see this flow through. So it'll be fascinating to see if US can really take that market leadership position with this bill. In terms of the emissions targets themselves, how much will the bill reduce? Obviously, that's the big focus. People want to be able to quantify that. The numbers at the moment are ballpark. Obviously, it depends how it's implemented, the take up and how things play out, but around about 40% emissions below 2005 levels, which we know is that benchmark level that's used by 2030, is what independent analysts have been stating. You can see here, there's early analysis from the Rhodium Group, 31 to 44%. Other modelers have found similar types of reductions. Without the bill, so the status quo of where we were tracking before that, the US was on track to reduce emissions by 24 to 35%. By 2030. We do know, however, there's an ambitious aspirational goal from the Biden administration of a 50% reduction by 2030. So it looks like it still potentially will fall short, but obviously it will get them a little bit closer. And so just to help to conceptualize that, Statista have produced this great visual here. We can see the 2030 target, 50% below 2005 level. It looks like we will miss this. What we're seeing here is the divergence or the discrepancy between the status quo, the current policy scenario, and then what may happen as a result of the Inflation Reduction Act that's aiming to be introduced. So we'll see in 2035, we're getting closer to that 50% reduction. Still not quite there according to this model, but of course it'll be fascinating to see the take up and how it plays out. In terms of what to look forward to, the Senate narrowly passed this week with Kamala Harris, the Vice President, having the deciding vote, but it's still got to go through the House, and then obviously Joe Biden will then sign that and pass that through if it does flow through those sequential steps. There's a number of different questions too. First and foremost, is this going to be inflationary? There's a lot of spending coming through, a lot of investment into this area. Is this going to be inflationary? Then we know that we're in a time of inflation discussion right at the forefront of it. However, it is worth noting as well that this bill and a lot of these changes are to be dispersed across a 10-year period. So it's not as if it's just immediately thrown in 1 year. It will be dispersed. There's a range of different milestones to be achieved for different areas as well. So that's worth noting. And then of course, the different areas that will be affected. Not all sectors will be affected equally. There's going to be some areas that have significant uptake in it, and then some areas that potentially it may take time to flow through for. We did see many of the lithium names get significant uplift over the past couple of days. Many of the EV makers as well over in the US, led by Tesla, which is a bellwether for the sector, but others like Rivian and Ford as well, started to get a lot of a bid and a lot of excitement over the past couple of days. I'd love to know your thoughts. Drop in a comment below. It's a fascinating time. It's going to be interesting to see where things head from here. A big thank you for joining us. For now, stay well and happy investing.